Hey, it's Dan. Welcome back. You're watching iAllegedly. And boy, do I have a good one for you today, because one person that I brought on the show last month was Bob Kudla, and we met at the Waldorf Astoria, and I asked him to come back. And with everything that's going on in the stock market, Bob from Trade Genius is back, and we're going to cover everything in the market, the economy, and everything together. And I'm thrilled he's here. So thank you, Bob, for being here.
Oh, hey, thanks for having me, and thanks for listening, everybody.
Okay. Please don't forget to the like button, guys. Please don't forget to subscribe to the channel. And but let's get into it right now. There's so much going on in the economy. We just got the producer price index numbers out, and it was basically flat, like you and I just talked about. But as we get this core inflation number, and as it starts to go up, and people are feeling the pinch right now, how is that right now, do you think, affecting the stock market right now?
Yeah, so right now the stock market, everybody's looking for gloom and doom in the markets, but a lot of times people don't realize stock market anticipates these things. So, we've just had a September to remember. When I was on last month, I told people that the probabilities for the market going down.
You should have a YouTube channel. A great title, September to Remember. So.
Yeah, so it's the September is usually a pretty bad month, and then everybody else usually says, "Oh my gosh, well October, we're going to crash." But probabilities tell us that's not true, and we pushed down pretty hard, and we're down already. I think 6 days already in a row in the market in anticipation for the CPI report that's coming out, and so you're going to have a situation that people are going to be caught goofy-footed on this. So we look at different data, and our data is telling us that we should expect between basically the 15th of October, if not sooner, to the midterm election, we should see a lift in the stock market. And again, It's a temporary lift. Doesn't mean that anything's all clear. It's just in these bear markets that usually run for 200 to 300 trading days, usually get 7 bear market rallies, and we've only had 3. So, the markets don't go straight down, they don't go straight up, they kind of go jaggedly.
Well, let's do this right now. Let's go back into, you've been doing this for quite some time.
Right.
And let's go through your background just a little bit, because you've got 30 years of experience, 30 plus years of experience.
Yeah, so I've been trading since 1991, but I've only been trading officially, on my own since 2006. So between that time, so my complete background, in case anybody wants to know, I'm a boy from Pennsylvania. I went to college in Pennsylvania, and then I went into the Marine Corps. So for any of you Marines out there, hoorah, and I was artillery officer. I was East Coast Marine, and I was in the Marine Corps for 7 years. And then out of there's these management training programs that big corporations, look for people, and I got picked up by Control Data Corporation. So I got a chance to start my career on the East Coast, and then my wife is from California, so we worked our way out west here, and so I worked my way up the company. So I started as a sales guy. I ended my career. We became part of Ceridian, and then I ended my career as the Senior VP of Business Development, which means that I was responsible for all the revenue that didn't come in from direct sales. So partnerships and acquisitions were the areas that if we did a study and say, hey, we're not going to do that ourselves, Bob, find a company. So that's how I got myself into the macro, and then in 2006 we actually were in a position to get bought out. I jumped over to RSM Gladry out of Minneapolis as well, which is part of H&R Block. Our division got bought out again, and I just said to my wife, I was 46 years old. I said, let me try my own gig here for a while. So I started trading in the mornings, and then in the afternoon, I started a solar energy company with my brother-in-law. We ran that for 14 years, quite successful, and we wound that down about 3 or 4 years ago. But in the meantime, I was just trading in a small group. I mean, we have the craziest names. So we're in the investor mastermind group. We don't lack for ego in trading. So we had this group. It was a private group. And then I met some other people, and they said, Bob, you should probably invite more people, and you should charge for your service. So I did. I started Bob Trade Signals. I had another customer who said, hey, Bob, You should take this more wider, get some investment money and turn it into Trade Genius. I did that in 2015, and now we're on our 8th year. And so all along, I've been trading my own stuff, my own book. I'm a hard money guy, if that makes sense. So I love gold stocks, I love silver stocks, I love energy names,
So do I.
and so because I know those are real and those are coming back into vogue. So
Yeah.
so I've been doing that for that long, and we've been growing every year. And we do stocks, we do crypto, we have a room that people could trade options and futures from
Yeah.
too. So it's a
Trade
complete
Genius
service.
is amazing. And, you know, one thing that I've taught you guys a lot about is I'm very lucky because of all the people I've met, you know, through the conference business and everything I do with my marketing company, and meeting people like Bob, having him on speed dial has been fantastic. And, you know, as interest rates go up, because they're going to go up a little bit more, you know, it's going to affect the market. And what do you think is going to happen? I mean, clearly there's no scheduled Fed meeting between now and the election. So it's going to be after the election. Can the election affect if they're going to raise interest rates 0.5 point, 0.75 point? Do you think that would have any bearing on it right now?
Yeah, actually, you know, so we look at some different numbers for where do you think the Fed's going to stop. And so Jerome Powell, you know, everybody thinks everything's such a mystery, but Jerome Powell told us what number he likes to look at. And he likes to look at this thing called the PCE, which is, you know, basically price expenditures. And he does a combo of the 1 month, 6 month, and 1 year. And from there, it's a blend that he looks at. And he's going to match that down with where the CPI is going. And so they look like they're going to meet in December and January around 4.5%.
Wow.
And so you already hear these guys starting to wiggle this week on, you know, it was 75 basis points, you know, forever till God comes. And now it's like, well, you know, we need to be a little bit more data dependent. So they're going to settle on probably another 1.25. They're going to hit that number and they're probably going to stop.
But that, okay, from the people that are from around the world, this is going to affect mortgages. It's going to affect mortgages in a dramatic way by going up 1.25% on the prime lending rate. And I just, you know, your opinion, I mean, we talked a little bit as we were walking down here to talked about England and the mortgages in England. A lot of people are in real trouble right now because the average person, they anticipate right now they're going to spend $10,000 more next year in England for their mortgage. Yeah. And, you know, they have a funky system where they write these loans for 2 years and 5 years, and then they have to get adjusted. And if the rates go up, you know, sorry, I mean, they're tough.
Yeah. So the issue, the difference between Europe and the United States is that we have mortgage-backed securities, and so the Fed backstops those, and the government backstops those. So we have 30-year mortgages and we have 15-year mortgages. Where in Europe they tend to go with adjustable rates, and so the United States is different than Europe. So you have in the United States, it doesn't really matter what the Fed fund rates does. It matters more what the 7 or 10-year rate's going to do.
Okay.
And so if the 7 and 10-year, and they've been sticky here, they can't push up any higher where it is. If that holds, then you have what's called basically an inverted yield curve, and it starts putting pressure on them to actually soften mortgages. Okay. But Europe's screwed because every time the federal fund rate goes up, their mortgages go up.
And they have a huge problem right now with energy and the energy prices that they're paying right now. And it's destroying small businesses, big businesses, manufacturing, everything over there's been hurt by this.
Yeah, you know, if you want to be Machiavellian about this, is that Europe's pain is America's gain. So you have manufacturers are moving basically more production to the United States. United States now is the largest provider of liquefied natural gas in the world. And so, you know, people always, you know, you get the hand wringers out there. Oh, woe is me, woe is me. I said, well, buy natural gas, buy FLNG, which is a shipper of natural gas. Guys have locked in contracts for 18 to 24 months at high rates. So, and they pay dividends. So plenty of places to hide out during this madness.
You know, and that's the thing, is that you bring up a great point. This is madness right now. And I always tell people to get solid financial advice. And you're my guy that I'm lucky enough to talk to. You know, with, you know, the alternatives right now, I know you like uranium, and I think that you're going to see these countries that are coming back to uranium. I think Japan, I want to say Germany is one of them too, that's looking at, you know, starting and selling uranium again and starting to have the plants for that. So it's going to be interesting to see what happens.
Yeah, they got the Greta blessing in Germany.
Mm-hmm.
So talk about doing a 180. Look, uranium's another 3 to 5 year opportunity, but don't dismiss coal. And if I could give you guys another freebie out there, take a look at BTU, Peabody Energy. They're about ready to go positive for the year, cash flow. They're going to blow out all their loans, and they're going to be able to now manage their balance sheet, which then can accelerate it. So there's so many opportunities out there in the energy space. And look, I'm a conservative guy, but I like renewables. I just hate the Green New Deal. If that dichotomy makes sense, and solar is just constantly getting more and more effective and efficient over time. And there's some tremendous opportunities in the renewable space and solar. So the market is basically it's a basket of stocks. So if some areas are going down, some areas are going up, and so there's plenty of opportunities.
One thing you've always said to me is, Dan, I don't care where if things are going up, things are going down, or sideways, we're going to make money in this. And that's the one thing that I've always been fascinated by this, because the one thing I beat into everybody's head is to get solid advice from somebody that's lived through this and been through this. And, and again, these young kids that are out there that are in their 20s that are managing all this money right now, they haven't seen, 2008. They haven't seen what we're about to go through. And again, get some solid advice so your money's protected, so you know where you should be. And there's nothing wrong with trading things and moving things around. And an investment that you didn't have 6 months ago and being in something completely new, if it's going to make you money, you need to look at things like that.
Yeah, and I want to be clear. I'm not a financial advisor or whatever they call those guys. I'm not licensed that way. I'm really an educator. And then what we've done is, if you don't mind, quick plug, we've created algorithms. So we let our algorithms kind of tell us turning macro into micro into trades. So we use that as we could see the momentum, we could see the levels, we could see the seasonal patterns. So that's
with
how we know those
multiple
things.
Industries, with multiple markets, with gold, with cryptos, with everything, you do that too. So
that's
it's
right.
I think that we are going to see a lot of people suffer between now and the end of the year. I think financially there's going to be, it's going to be a cold winter in the East. It's going to be a cold winter in Europe. We had rain today, believe it or not, guys, which was unseasonable for us. So I think we're going to see different times right now, but it's going to affect the economy in big ways, to say the least. So.
Yeah, look, you either have skills or you have cash or you have the ability to maneuver in the markets effectively. You'll be fine. So this is not an end of the world event that's happening. This is basically, I hate to use the word reset because I mean it differently than what the globalists mean, but we're bifurcating in the market. So we're going from financialization to hard assets.
It's sad because right now, a lot of people are taking huge hits on their 401ks and IRAs and just, one woman wrote me and says, my husband's lost, $40,000. He won't open the statements anymore. It's just not a method to get through this by any means.
No.
So you've got to have a plan. I love your system because of, you make the recommendations and then people trade from that. And, but your expertise has been fantastic. And you've got big guys and little guys that are involved in this. And do you believe that unemployment is as low as it is right now and under 4%?
So the unemployment rate, Dan, is it's kind of a weird situation because of demographics. So we have a situation now where the Fed's desperately trying to cause unemployment to kill demand, but too many people are retiring. Mm-hmm. So there's a skills gap out there too. So unemployment is not going to be really where you're going to want to look for the pain. What the pain's going to be is that prices are going to outreach people's salaries. And that's
happening right now.
Right. So you're going to be employed, but not be able to buy anything.
Well, that's a horrible way to live, because right now, people talk about New York City, how they can't afford apartments and the rent gap has gone down. It's gone up so much right now. And that as wages have gone up 9%, people are not keeping up with that at all as far as the ability to pay for things.
Yeah. And it's a problem. And, and I know we wanted to talk a little bit about real estate. So a lot of people always ask me, like, And I'm not a big real estate guy per se because I like being liquid. I own real estate. I own property here in Southern California, so I'm committed to it, and rental property in California. So, um, but I don't prefer it. My wife likes it, so we have it. And so we have a situation where people say, well, how do you know it's overvalued or undervalued? And there's a thing called the cap rate, which basically tells you what's the percent profitability on having a piece of real estate. In and of itself, that number is meaningless until you compare it against the risk-free rate of the 10-year yield.
Okay.
So, if the cap rate's 4% and the 10-year yield's 4%, well, you don't want to own real estate because you have all the risk,
Yes.
right? And you can just let your money sit in a bond, and you can get it out tomorrow, where you're stuck in real estate long term. So the way you look at it, and the 10-year, not the 10-year, but the Fed fund rate. So the Fed fund rate is going to probably end up at 4.5%. You have to tack on another 2.25 or 2.75 onto that, and that's your spread to make sure whether or not you're buying a piece of property that's going to give you the spread for profit, and that's 40% overvalued where we are today.
I look at, I have all these different real estate sites and 50 news sources and everything I look at, but Mortgage News Daily is one thing I love to go to, and you're seeing fixed rate 30-year mortgages well above 7% right now, 7.12. That is outrageous. Now, people that are in the mortgage business say we had this in, just a few years back. It's, this is not unheard of, but the housing prices have gone up substantially, and you're seeing markets that were $200,000 that are now, $400,000, and those are dropping right now. We just talked about Las Vegas and how we're seeing that is dropping substantially. You're seeing all these markets that were hot. And I got something sent to me about Boise. Boise, they say, is 77% overvalued, and Vegas is 60% overvalued. That's
Right.
crazy when you think about that.
Yeah, because what they do is they take, if you could buy a property for cash and the rent that you could expect from it, and you compare it against what you get if you just had your money in the Fed funds rate, you're insane for buying real estate right now. You'd have to have a 30, 40, 50-year window, and you're not going to buy residential real estate, which would fall apart in 40 or 50 years. So, my personal view is that we've hit our high in 2021 for the generation. That doesn't mean that, pockets here and there can't go up, but
okay, that's a bold statement. As far as real estate is concerned, we hit the high. Do you think? I mean, Bob, as we talk about real estate, I really start to see these hot markets that are not hot anymore. And you can talk about overvalued, and you can talk about areas that have doubled and tripled in price. But I just think the average person has spent too much, and this feverish pitch that people got into to buy property. I think that it's catching up to people, and a lot of people are not fiscally responsible. They don't buy their house and then don't borrow against it. The thing goes up 50 grand. Oh, we can get 25,000 out of it. Let's get the 25,000 out of it. And then the price goes down, and then they're upside down in the house. And you see people do that. And living here in Southern California, we see a lot of people overextended here. And I've talked about that, so many times on the channel.
yeah, look, I think there's a multi-year decline. It's not like 2008 where it all happened in 9 months. It's not going to be a U-shaped kind of recovery on this. Is look, we're all getting older, and who are you going to sell the house to? If you have children, are they going to be able to afford your house? That's the only question you have to ask yourself. And the answer is no. Then you kind of know where the prices of the houses are going.
I just covered this last week walking through Balboa Island, and that was that people, this is the biggest wage gap right now and biggest problem with people inheriting property, that they can't afford the taxes on the property, and they can't afford the simple maintenance to get the places to be rented, so they have to sell the property and unload it.
Yeah, so, and if you start getting an imbalance, they're going to be taking big haircuts. Yeah, so the market's 40% overvalued if you just look at simple math. Now, that could be resolved by 40% inflation.
The real estate agents right now are flipping. What's he talking about? Okay.
Yeah.
Okay, so that's a bold statement. I love that. Bob, we've talked about my audience, and I've got a worldwide audience, and it's basically made up of 3 groups of people, where you've got people that want to get into the market, people that have a substantial amount of money that have gotten out of the market, and that people are kind of stuck right now. And I want to talk about that first group that want to get started. And, one thing that I've heard you say to your clients and to people that are part of your group is that you can trade and make as much as $100 a day. And I want to talk about something simple like that, and what it would take to get somebody started to even make $100 a day trading.
Yeah, so there is a type of trade out there called a credit spread, where you're selling one option, you're buying another. Forget all the jargon. We'll show you how to do it. Is that you're basically looking at um, as long as you're not wrong, you're going to make money on the trade. So the credit spread puts money in your pocket right away. So we do a trade with the S&P 500. It looks out 1 week ahead of time. We try to capture, if you have 10 contracts, which will cost you $1,000 in margin, they'll hand you $150, and you just hold on until that week expires on the contract, and that money's yours and money good.
Oh.
And so what we try to do on that is, because you win about 80% of the time. So our goal here is to have people walk out over time at about $100 a day. You do that 5 times a week, and then
say those numbers again that you always say, because it's like, if you made $100 a day, okay,
20 grand a year in the stock market, and if you make $400 a day, you're $80,000 in the market, 100,000. It's even more than that. So I'm just making it really simple.
Yeah.
It's 250 trading days, but let's say you only trade 200 days a year, right? You're making 20 grand by making $100 a day. I have a guy that he was losing money left and right, and he just started adopting this very simple approach. And his goal was eventually get to $400 a day. And so I said, well, don't try to make that all at one time, because you're going to blow your account up. If you can make $100 a day consistently, you're doing the right thing, and all you do is you add size. So over time, you're going to make the money that you need to make. So we show people how to do that. That's part of actually the standard service. That's not even a special thing that I do.
And
I put those out there every day.
Trade Genius.
Through Trade Genius. So what we do is that we provide, first of all, training on how to use our system and basically how we trade. And then the other things that we do is we have chat rooms, so that you can communicate with me all day. I have a Discord. It notifies if you want to get a hold of me, and I communicate with you. And then we have trade signals I put out every day. And then we give you access to our algorithms. So this is not a guru-based system. It's a math-based system, and it works. And we have the probabilities that prove it.
I had lunch with my brother, and he's like, you could get a hold of him right now. It like as we're sitting at a restaurant, he's like, I'm not bugging Bob right now. But I love that. And also, with everything, how precarious everything is right now, real estate, the election, the economy in as a whole, with all these big retailers having problems right now, how do you feel about that stuff? Do you think that Walmart, they're going to survive, Target's going to survive, but with all this extra inventory, them not buying billions of dollars worth of merchandise for the holidays, how does that affect things right now? And how do you feel about that?
Yeah, well, we're going into recession, so that overhang has to go away. China's cutting back on the supplies they send to the U.S., so it's a 6 to 9 month problem, for the overhang. And, there's a lot of good guys happening too. So manufacturing is moving back to the United States. Energy is in a renaissance. Republicans take over if there's, a red wave in the next 5 to 6 weeks, is that energy is going to get support, politically, and a lot of jobs in there, for people, get a skill, be willing to move, and you're going to be fine. And, being in retail and stuff like that, you're going to go through some pain. Restaurants are going to go through some pain because food prices are going to keep going higher. But there's plenty of opportunities out there.
We've seen it locally. Restaurants in this high-end community that have gone down. And, this hotel, we're at the Ritz-Carlton, guys, right now, and it is not busy, to say the least. So you got 2 guys sitting here filming. Yeah.
Normally it's a shoulder season. You have a lot of shows here, but I would say it's 30%, maybe 40%.
Probably.
Yeah.
Probably.
I was just in Maui, not a plug for me, but it was really quiet there too. And normally it's off season there, but the people there say people aren't buying anything. They're there to get the weather, but they're not buying anything. So look, our view is recession into 2023, and then the Fed will pivot at some point in 2023. The market's going to go down further. It's going to go down sawtooth style, and then there's opportunities to catch these bear market rallies.
And you talked about that. So the bear market rally, we haven't seen the bottom yet. Okay,
no.
And as you say, it's don't try to pick the bottom, because it's never going to happen.
Right.
But you feel that we could see a jump up for a while, and then it's going to take a turn.
Yeah, so the math and the Fed liquidity is telling us that that they should lift this. And I was just showing Dan before the show. I said, yeah, a couple days ago, Janet Yellen was screaming about everything looks great, and then today she's screaming about there's concerns about liquidity. And usually the Fed breaks when they can't manage the Treasury markets, and that's what's happening right now. So I expect a turn. It's not the turn. Every turn is always bull markets coming, but we still have another probably 100 trading days of pain coming, and and
Wow,
lower.
100 trading days.
Yeah,
Wow.
but in that
20
there's
weeks, guys.
yeah,
That's what that works out to.
yeah.
So, I just, wow. Okay. So, again, you know, um, people that need to protect themselves, their 401ks. Do you think that we're going to see the rise in gold and the rise in silver that I've been talking about for years? And just the industrial uses of silver alone, if people did the math on it, it's not enough silver to do everything.
No.
Bob's big on solar. You need silver to make solar panels. So
Yeah, here's a little known secret. Gold and silver outperformed the S&P 500 in the month of September. So you wouldn't have known that, but it has. And even with the PPI reports, CPI reports coming out, we were getting buy signals today on the gold and silver miners. So
really,
yeah, which was really, I was surprised. I already own them. I didn't put them out for trade signals yet because I want to kind of wait to see them digest the CPI report. But going into the fourth quarter, into December, gold and silver miners and gold and silver do well. So hopefully the probabilities will pay off. And I'll make one last point too. What I'm telling you is in the future. If I knew all this stuff for certain, I would be on an island in Tahiti. But what you have to be able to do is, if you're wrong, you just have to react quickly.
yeah,
So I just want to let people know, if it was that easy to call it collecting.
yeah.
So
No, but I do. I
yeah,
told everybody, as the market is up and down one day, and then we get negative news that doesn't affect the market, then we get things that you think are good news that make the market go down, and then it keeps going down. It keeps going down. So you're my go-to guy when it comes to this stuff, and I appreciate that. So guys, I hope you enjoyed me bringing Bob back. And again, the link for Trade Genius will be below. And again, anything else you want to add to Trade Genius? Any specials or anything right now you guys have?
yeah, just go to tradelikeagenius.com. We put together 7 specials, and they range from stocks to crypto to combo packages, 65% off, and you have till Saturday to take advantage of it. And if you don't like anything in the bundles and you want to just buy something in the store, it's 40% off. And the the bundles are already pre-discounted; those are not. So that's from gross to net 40%, and use promo code Columbus for those. But you have till Saturday to take advantage of it. And Dan, thanks for letting me plug it.
No
And
problem.
yeah,
I'm glad you're back. And I just,
yeah,
you live close to these nice hotels. So it's like, oh, I'll meet you over there. So
yeah.
fantastic. So again, guys, please don't forget to hit the like button. Please don't forget to subscribe to the channel and take a look at Trade Genius and onward and upward. Don't forget, guys, we're having the big party November 12th. And I know somebody's been invited to it. So let's hope you can make it. And I'll give you guys more details later. And within the next couple of days, you guys will get all the information on that. Onward and upward, guys. I will see you guys very soon.
Great, thank you.